so first thing that most of the agents don't realize, or your buyers, is that the tax year in San Diego County goes from July 1st through June 30th. So it's not a calendar year. It's not January 1st to December 31st. It actually goes July 1st through June 30th.
Who needs paper?
All right.
Paper. A lot of you guys are sitting here with nothing.
No paper.
You need some paper. You need some paper. You need some paper.
So what the supplemental tax bill is literally the county assessing from the day your buyer bought the property to that June 30th date. Because the tax rate was set for your seller. Let's say your seller pays $5,000 a year in taxes. And let's say your buyer bought on January 1st. Okay? And now their tax bill should be $6,000 a year. All right? Well, they only own the house for 6 months of that fiscal year in that example, so they actually would have a $500 supplemental tax bill because they should have been paying $6,000, but that first year they paid $5,000. Does that make sense to anybody? And again, I'll explain that. We'll do it in writing so you can see, because most of us are visual. But that's why there's supplemental tax, and it's different based on when the seller bought the home. Because of Prop 13, my grandparents in 1955 bought my first home, their first home, for $8,500. Their tax, even when my grandma passed in the 90s, was like $1,100 a year. Now, I bought it from my grandma's trust when I was 22 years old because I didn't know any better. And when I bought it from my grandma's trust, the county said, "Thank you, Mr. Hall. We're now going to reassess the home at $150,000. And for the next 10 years I owned that home, I paid 15 times more in taxes than my grandparents because I went from grandma's trust to grandson. That does not count as allowing to assume the exact same tax rate. But had we just quitclaimed it from grandma's trust to my mom to me the next day, I would have paid 15 times less for those 10 years. So that was a very expensive mistake at 22 years old, okay? But because of that mistake, I know supplemental taxes better than any lender in San Diego, I guarantee, right? Because I've been down to the tax guy. We've worked out problems with a lot of my clients. I care about it because I learned hard originally, all right? But let's say you sell neighbor 1 at $600,000 and neighbor 2 also at $600,000, and you were so fortunate you put the buyers in 1 and 2. And they both call you and say, "Hey, we just got a supplemental tax bill." Buyer 1 says, "My supplemental tax bill is $3,000, Mike," and buyer 2 says, "Well, mine's only $1,500." Why is that?
Because property number 1 had a lower initial tax.
Right, and that's the answer, right? Because the seller bought at a lower price originally than the seller B, right? And that's going to happen. And I'll explain that in the class, and so I'll do that more in detail because I love it. I love helping agents and buyers understand it, and that's something Mike and I are setting up with Tom and I. And so we're going to do a class on that to teach you guys the ins and outs of supplemental taxes, tax questions, and literally Tom and I have gone down to the tax person and said, "Hey, we disagree with this," and they look at it and they go, "Oh man, you're right," and they've corrected, okay? Because we know the ins and outs. We've actually been down to the county tax assessor and literally sat down with them. All right, so we're going to do that for you absolutely free. We're planning that up with Mike, so that's something that we'll take care of.
What should somebody do when they get the supplemental tax bill?
Okay, that's a good question. So, yeah, don't ignore it. So the supplemental tax bill is never sent to your lender, even if they have impounds. Okay, the only way it gets there is if you send it. And I tell every one of my buyers, and I'm sure Paul Johnson's team does the same, when they cancel them in the beginning, "Hey, you're going to forget some of these things, but you're going to get the supplemental tax bill. When you get it, call me. I'm going to walk you through on what to do." We, and I'm sure Cross Country does the same, we set the tax rate based on what we assume the tax value is going to be as the purchase price. So we set 1 1/4 based on that 99% of the time. A lot of online lenders, because they don't work in California or live in California, they said, "Hey, the seller's paying $1,000 a year, so guess what? Our payment's lower than Jason's," and then they get this big, huge supplemental tax bill, and then they want you to bring more money 6 months later. Because what most agents and buyers don't realize, your taxes aren't even set until 30 to sometimes 180 days after they buy the house. And it's at that point they find out their supplemental tax bill and they get the bill. But when you get the bill, if you have impounds, call your lender who's servicing the loan, or call me. I'll do a conference call with the lender, and we make certain you haven't refunded my client's money, right? "Oh no, but we don't pay the supplemental." "Yes, you can. Put your supervisor on the phone. There's plenty of money in there," and we forward that supplemental tax bill so the So that's paid for. Now, sometimes by the time the client calls me and we call, they've been refunded a couple $1,000s because they do an escrow tax analysis at the mortgage company. They go, oh my gosh, Jason collected too much money. Here's $2,000, Jeremy. And Jeremy's like, wow, we just won $2,000. We're going to go Super Bowl with Kyle and Jason. Right?
I wish the tickets were $2,000.
Yeah. They're going to be. They're going to be. All right, we're going to get there. They're going to be. I'm telling you, man, I'm trusting.
The tickets to get into Buffalo Wild Wings to watch it.
Yeah, we're going to get there. All right. So anyways, the client then spends the money. Then they get the tax bill. And when we call the lender goes, oh no, there's not enough money because we already refunded Jeremy the $2,000. Right? So I always tell the clients, if you ever get a refund from the mortgage company, this is outside of your closing escrow date, which there's usually a couple $100. Take that money, put it in the savings account, because they're going to want it back. They're going to want it back. Don't spend the money. All right? So I hope that's just some basics you guys can help understand and analyze that. And I know you're shaking your head because you've been through this a lot, being a mortgage person.
Here's what to write down, Mike. Call lender.
Yeah.
Right.
She's like.
So a video, what will be helpful here, I think, would be we have a video explaining what is a supplemental tax bill,
Yeah.
or you guys probably have one on your website, right? So
We actually have in our
a
website,
document.
you can put in what they bought it, and what your buyer's going to buy for, and it's going to print out a sheet and tell you what to look for.
yeah, like ideally we link it to something they put together, so if it's wrong, we can just blame them. But we link like, what is a supplemental tax bill? Here's what it is. What do I do with it? Call your lender. Like, we just need to give them that instruction, because otherwise they're going to receive and be like, oh shit, what do I do?
Yeah.
We don't. That's the last thing you want. You want to prep them. And now here's what's going to happen is you're going to have it in step 10. Then they're going to get it and they're going to be like, oh shit, what do I do? Still, even though you told them. But now you could just resend that. Say, oh, hey, totally understand. Here's a little, explanation of what it is. And what we recommend you do is call your lender. And you could just do that automatically. I think even if you guys don't have a website or a doc that does, I think Nicole has one in her arsenal of documents that's put together. That's the key, is you just got to help them understand what is a supplemental tax bill. And you saw how difficult it was for him to explain it. You guys trying to explain it, it's probably not the best idea. Let's just link it to another company and let them be liable for fucking it up. And then we just tell them to call their lender. It's the best thing you do. A lot of times you want to pass liability off on other people. It's beautiful.
You want to give your buyers a heads up, especially if you see like on the tax record that they're like in this area, like North Park, where the house has been there a long time. If they're like close to original owners or original, they can get hit huge supplemental.
But at the end of the day, your current tax bill and your supplemental tax bill is going to equal whether you buy house A or house B next door.
Yeah.
Does that make sense? Because if you assume a $1,000 bill and they give you a $5,000 supplemental, it's still $6,000. Or if you assumed one, they're already paying $6,000, it's still $6,000.
Yeah.
So you don't pay any more
So your
total
impound account
for
should
each.
be padded enough.
Correct.
Should be.
The lender did their job and prepped it appropriately. When you call your lender and send them the supplemental tax bill, they're expecting it, and it was already built into the amount that you're paying them. But there's no guarantees of that.
And the online lenders typically don't, because they're not headquartered here in San Diego or California. But that's why Paul's team and myself are really hoping you guys recommend a true solid lender who's been a guy who, like we talked about, I've done over 1,000 person transactions in San Diego. I've been through the supplemental tax bill. I've done everything. I've seen things that all you together haven't seen, and Tom's probably been seeing more than all of us, and me and Kyle. Right? Tom's seen more than all of us, so you want to use and tap into that experience that we have from Paul, Tom's team, myself, and so we're here for you. And Kyle calls me and says, hey, my seller got this, what should I do? And I had nothing to do with it, but because of my respect and experience with Kyle, I help him on that, because I know long term that's going to come back. Okay, so thanks guys.
Cool.